Let's discuss those movements now with Wayne Mccurrie from FNB Wealth and Investments. Wayne, yesterday was really a bleak day on the JSE and it ended the day over 1% in the red. Today, 1/3% in the green to end off the day. What would you say were some of the biggest drivers of today's market movements?
Well, look, I suppose it's always dependent on what happens overseas every time. You know, the US markets had a big rally a couple of days ago. Yesterday wasn't too bad, but certainly by the time our market closed, the US markets were looking, about 0.5%, 0.75% negative. So once again, it's this global worry about inflation and what the central bankers are going to do about inflation that's actually affecting markets.
Let's talk about the local unit. That's really lost some of the gains that it's made over the last day or two. 17 Rand 91 or thereabouts against the US dollar. Is this once again a dollar story, or are there some other factors that are informing the weakness of the Rand that we're seeing today?
It really is a dollar story. I mean, we haven't changed much against the other currencies. But, we're reaching the end of this phase of massive dollar strength. I mean, the Rand might take another year, but it will strengthen, as the economic cycle changes and we start seeing lower inflation and the prospects of lower interest rates sometime towards the end of next year. The Rand will probably strengthen quite significantly against the dollar. So this is just a very normal Rand movement. It always goes to an incredibly weak point and then rallies back to some sort of fair value level. And it might, as I said, it might take a year to do that, but the Rand will do it again once the cycle changes and there's prospects of lower interest rates in the future. Interest rates could very easily be cut domestically and globally in 2024. And under that type of environment, the emerging markets and the currencies like the Rand will actually do reasonably well.
The price of Brent crude, Wayne, that above $91 a barrel once again. I mean, it did increase after OPEC made its announcement about cutting supplies. But is it also an indication that there's a little bit more appetite in the global markets for Brent crude? Are we starting to see that people are a little bit optimistic about the global economic outlook?
No, not at all. There's quite a few interesting dynamics happening in the oil market at the moment. First of all, OPEC's saying they're going to cut by 2 million barrels is actually not entirely correct. They haven't been delivering on the quota that they're supposed to for a while now. So the actual reduction in oil is only about 800,000 barrels a day, not 2 million barrels a day. Secondly, Russia is selling oil like crazy to India and China at 20% discount to the current price. But maybe the third point's the most important. The global economy is going to slow down this year and may even go into a recession sometime next year. That sorts out demand for oil. It sorts out wage pressures. So no matter what OPEC does, I think the oil price over the next 6 months is actually heading down quite materially. I think it could easily go back into the 80s and maybe even into the 70s. So this little fillip we've seen now is just almost a reaction to OPEC, the announcement. And I think the prices will just continue to slowly erode as we go forward, because demand is actually falling quicker, quite frankly, than what OPEC can cut by.
And then Thungela Resources, Wayne, earlier on in the day releasing a statement saying that there are concerns around the Transnet strike. It's already, as Transnet says, an illegal one has ensued, and they're saying they can manage their operations logistically for about 1 week, but should the strike go beyond that, then it's going to see it lose out on about 300 kilotons of exporting its cargo to its markets outside of South Africa, and that could be problematic.
Yeah, look, problems with Transnet's not new, whether it's a strike or whether it's the efficiency of transport and how they operate. This has been going around for at least probably since about 2005, 2006. And South Africa as a country has lost out in the last commodity boom on the back of China. And now we're also losing out now again. But this is not new news in the South African context, unfortunately. Now, Thungela has said we've got big stockpiles already because Transnet's already been problematic even before the strike. So they've got big stockpiles at their mines, and they can, as you said, only produce for another 6 or 7 days before they can't store any more coal. So then they'll have to stop mining coal. They also say at the port, there's a reasonable stockpile at the port. Now, the Richards Bay coal terminal is independent of Transnet. So in theory, they can still export coal from that coal pile, but Transnet's got to supply tugs and skippers and pilots to actually get the ships in and out. So that might be a problem. But they did say that it's unlikely that the effect on actual sales will be material. But of course, if they've got no more place to put coal at the mines and Transnet's not transporting and they actually stop mining, that could have quite a significant impact. But, you know, there is hope on the horizon, because effectively Transnet, by involving the private sector and the big players, you know, in 2 or 3 years' time, the operations will run a lot smoother.
Wayne Mccurrie, as always, thank you very much for your insights. That's Wayne Mccurrie from FNB Wealth and Investments. And that's it for you.